right, good morning, consistent traders. Welcome to the Consistent Trader YouTube channel. This is your daily recap and forecast on the Euro US dollar. And we're actually going to take a look at the Great British Pound and the Japanese Yen today. But today was a great trading day, one of our best days in a while. We had a 0.26% increase in the account. It's about a $12,000 account. But you can see there's just pretty good volatility. It was slow. You know, we are in those summer months, August, the summer doldrums where things are kind of slow paced, but we still had good, strong moves in all directions. So the recap really is that we kind of made money throughout all of this. We started buying somewhere around here, which is a little bit early to buy, but I was shooting for targets below this line right here. Which, by the way, why do I do that? Because it almost always comes back and tests the previous low or the previous high where the break is. And it took a while, and we were actually out of our trades before it got up to here. I think we got out of our trades by here. But look where it came. It came within 0.3 pips of that previous low right here. Okay, and eventually it did come all the way back up, okay, but so it wasn't actually a bad idea, but I got in a little bit too heavy here. My risk was a little bit too high, but we were buying all through here, and this was just great trading, great for scalping, great for swing trading. The 5-minute chart stochastic was overextended on the downside, somewhere around here, so this is where I started getting a lot more confident in my buys, and we can see that it's since pushed through. If you're still trading the market right now, you know, we're really just in a sideways consolidation. This is a little bit of a head and shoulders, and there's a chance we might have a breakdown. Let's actually look at the hour chart to take a look at that, because we have some pretty interesting things, movements in this chart. And you know, we had such a long, just solid bearish run for over a month here. And our bullish run, which I was ready to be also for about a month, is kind of looking like it's over. It wasn't really even a run, just maybe a little bit of a pullback on the day chart. But we'll see. There's still a chance for this to be bullish, but if we look here and draw our lines, and this is getting into the forecast a little bit, we absolutely have a downward trend. There's the trend line there, and then there's the trend line there. So, recap, how do you draw a trend line? A trend line is strongest when there are 3 points touching it. So this trend line, we have 1, 2, 3, just coming right up and touching it. We have 2 false breaks here and here. This was a news event, so it was kind of like a weird, you know, atypical event. And then this one right here was an attempt. It got to the previous high, but it failed. And then notice that this came up right to that line. So there's our trend line up here. Trend line down here isn't quite as consistent, but you can see we've touched it 1, 2, 3, 4 times there, and then once here. So that's a pretty solid trend line. And it's always nice too when the trend line is, when these lines are pretty much parallel, kind of like we had back here, because that's a more sustainable trend line. So notice today though, we haven't come up and hit this top of the trend line yet. So in terms of forecast, there's a decent chance in the next 24 hours or so, it might come up and hit that high. The fact that it's been hanging out here though, right along this trend line, that's actually a bearish sign. And there is a chance that we'll see a break down before we see this, but if it does come up here, I expect it to bounce off of that and come back down. Overall, this is definitely a bearish market once again, unless the exception to that is if we break this trend line, and really then we're just in consolidation. If we really want to create a bullish trend, we actually need to break these previous highs. So there's kind of a line right here. If we can break that and create a better high, a higher high pivot, then I'll say we're still in a bullish, or maybe we're back in a bullish market. But for now, bears kind of have the charge, and the trading this morning, it was pretty clear that bears kind of were in control of things. One thing I want to point out that was pretty interesting, just to hopefully this helps you read who's in charge. Is it the bulls or the bears? Because there's always going to be moves in both directions, but just because the bulls maybe are having a charge doesn't or a move doesn't mean they're in charge. So right here, right, we went 20 pips. By this point here, we were fully overextended on the downside on the stochastic, and we had crossed the previous high. So what I was really expecting was a leg up like that, okay? And then a continuation down. But that didn't happen at all. And you can tell a lot of people are expecting, like a lot of people threw on some buys right here, but the bears were in control and they pushed it down, okay? Then we got a little bit of volatility here, but then notice what happened right here, okay? And right here even, okay? So we finally started getting a bullish leg up, but instead of having a strong move like this, here or even here, it got slammed down, hammered down, all the way, 100% retracement by the bears, okay? And it wasn't like, you know, it's not that the run was over, because then we had another bullish move up, right? But the point is that you can see pretty clearly that the bears were completely in control. Maybe not completely in control, but they had the power. They had more power than the bulls did. And the fact they were able to slam it down, the bulls couldn't even make a leg up back here. That's what the bulls wanted. They weren't even able to make just a standard leg up to the previous low. Versus the bears, I mean, frankly, they didn't need to slam it like this. I mean, what I would expect to see here is something like this, and then to bounce up. They slammed it all the way back down. So anyway, those are the kind of things you want to look for when you're deciding whether overall the bulls or the bears are kind of in charge. You can see that over here too. I mean, this is obviously a bearish trend right here. One thing to look out for is how steep are the runs. This is a steeper run than this is. Obviously, that was a nice little move, but it's not perfect. But as you watch it and as you gain more experience, and I'm still in the learning process here too. I don't know everything by any means, but I have learned to watch how the bars are moving to get a sense of, you can feel who really has the power there, and who's in charge of what's happening. And even the bears want to see legs up like this, because that's a healthy market, and it actually allows them to have stronger, more consistent moves. So there's nothing wrong with that for either side, but that underlying kind of power is good to be aware of. You can also look at the wicks, like all through here we had all of these wicks up here. Those are all pretty bearish signs. Anyway, hopefully that's helpful. So in terms of our forecast, expect it to be bearish in the next 24 to 48 hours still. You might want to wait until a solid leg up before really buying. There's definitely room here to have a leg up. Looks like 20 pips or so. And then you can sell. And if tomorrow morning we're right here, we'll absolutely be selling. But if you want to watch us live trade, watch me live trade every morning at the US Open, so 8 a.m. to 10 a.m. Eastern Time. I'm live trading on Twitch at twitch.tv/consistenttrader. And we have we're building our little community there of traders sharing ideas, and it's a pretty fun time. So check us out there, and good luck with your trades.